Welcome to the Cobell community, where together we gather, network, share, learn, and grow. The Cobell community invites you to delve into Cobell Skills, a resource series for scholars, alumni, reviewers, leaders, and friends of Cobell. This Cobell Skills topic is part of our well-being series. We'll be looking at the dimensions of well-body and in this installment examining how we care for our whole selves, this time financially, as we delve into credit scores. Whatever steps you take to improve your life, whether that is your mind, your body, your spirit, you also improve circumstances for those you are in relationship with. Being a role model has implications for all your relations, family, community, ancestors and descendants, the earth and the skies, things seen and unseen. Improving your overall wellness isn't selfish, it is shoring up your strength so that you can continue to do the good you strive to do. As always with our well-being series, we recognize many of you may come with teachings from your own family, clan, tribe, or nation about how to live a good life. We honor those traditions and offer some additional thoughts about wellness. We encourage you to lean into your models, teachings, and experiences and see where these additional ideas around well-being may fit for you. First, let's review the 4 dimensions of well-being. In our model, these dimensions include body, spirit, mind, and relationship. We are functioning effectively and are well when these dimensions are all in balance with one another. If we neglect one dimension or if we give too much attention to another, we run the risk of becoming out of balance and feeling unwell, overwhelmed, and disconnected. So let's jump right in. You've likely heard of a credit score, but have you looked into what it really means, how it can impact you, and how it can improve your financial circumstances by keeping a close eye on your credit score? A credit score is a 3-digit number, usually between 300 and 850, that lenders, landlords, and others use to estimate how likely you are to repay borrowed money. The higher the number, the more opportunities there are available to you, and if you are borrowing money, it will cost you less. Your credit score is built from credit reports kept by 3 major bureaus, Equifax, Experian, and TransUnion. Lenders, landlords, insurers, utility and phone companies, and even some employers look at these credit scores. This score is used by about 90% of U.S. lending institutions. Ways in which your credit score can impact you include renting and buying a home, buying a car, or any other loan, or accessing your utilities or insurance. Some employers now use a review of your credit history as part of their hiring practices. Your credit score is impacted by your payment history, how much you owe in credit debt, how long you've had credit available to you, how many times your credit record has been accessed to potentially open new credit, and having a responsible mix of types of credit that you are managing well. This chart provides an overview of credit score ranges, along with some typical views from lenders. The highest score range, exceptional, will pay less for their loans with lower interest rates, easier approvals, and possible other favorable terms of repayment. When the credit score decreases, the odds of getting favorable credit also decreases. While you might not think you need credit now, it may be wise to start building your credit history for your future. One way you can get an early start is to be an authorized user on a trusted family member's credit card or loan. Be sure that you are only associating yourself with those who have strong credit themselves. This tip sheet you may save for ways to keep your credit score healthy. Remember to pay all your bills on time. Keep balances under 30% of your card's limit. Keep old accounts open to expand your average age of credit. Apply for credit only when you need a new card, as applications will pull a new credit inquiry, which can temporarily ding your credit score. Periodically check your credit reports to make sure they match with your records. And make wise use of early credit options, being patient, because building a good credit score takes time. On the other side of the coin, here are some behaviors to avoid. Avoid paying late or skipping payments. Don't max out your credit cards. Don't close your oldest account. Don't apply too often for credit cards. Be sure that you check your credit reports, and don't co-sign for a loan without a solid plan for repayment. The relief you feel from having a solid financial foundation will impact the rest of your well-being. For more information, have a look at these resources. Be sure to check out our other skills resources in your Cobell community. And don't forget to connect with us on your favorite social media platforms. See you again soon.